We're going to be talking about what you should expect if the war kind of continues as is, what to expect in each sector, and what are the companies that can maybe do well if that sector does well.
Hey Alex, how you doing?
Doing great, James.
You ready to talk stocks and more?
Yeah, I'm excited to kick off this new playbook that we're going to be taking people through.
All right, so we just finished our AI bottlenecks mini series. We're starting a new one. Tell us about what we're going to dive into.
Yeah, we're going to be talking about the not so fun topic, but the necessary topic that we live in, and that is war and the impact that war has on your invested money.
Okay, well, unpack that a little bit. How are we going to break out this season or the episodes?
Yeah, so we're going to be doing a 3-part series here again, where the first episode, we're going to be talking about what you should expect if the war kind of continues as is. So assuming that things don't really blow up from there, what should you expect for that? Episode 2 is going to be diving into what happens if the war de-escalates, meaning that what if we come to some sort of peace agreement? How are stocks going to react from there? And then finally, the third part in the series is going to be episode 3, where we dive into what happens if the war significantly escalates. So people will have to stay tuned to really figure out what to do in each of those scenarios.
Yeah, I'd encourage everyone to like and subscribe so you can stay aware of when we release those. But speaking of war, and or maybe there's some synergies for other volatile reasonings, if there's some big catastrophic weather scenario, hurricane, typhoon things, maybe has some similar things that impact the market. But setting some boundaries around what we mean by war, because obviously there's probably a war going on anywhere or someplace in the world.
Right.
What are we talking about here?
Yeah, so to get really clear on how we're going to define today's episode. So basically, the conflict remains active with what's going on right now. No meaningful peace agreements, but we're also not seeing a major expansion here. We're kind of keeping this between the U.S. and the Middle East countries right now. We expect like certain spikes in volatility, but no major events. This is going to cause energy prices to kind of remain elevated. Countries are going to be looking for ways to secure their energy supply just because oil is such a big proponent there. And then we're assuming as well, businesses are going to be adapting their strategy. They're not going to be panicking or moving away from the Middle East completely, for example. They're going to be adjusting and kind of flowing with things from there.
Yeah, you bring up some good points. Obviously, this one with Iran is constraining and creating issues for oil, which is obviously runs the world,
yes,
in tandem
exactly.
with other resources and whatnot. But so oil's got a big impact. At the same time, you have a lot of innovation and growth happening in technology that's being impacted as it tries to build out all this extra spend on AI build out and whatnot. What else should we kind of think about this?
Yeah, so I think one of the things that, like the takeaways of what's going to be happening is uncertainty is going to remain high.
Yeah.
We assume energy prices are going to remain high. This can cause inflation to pick up, which then starts interrupting with, is the Fed going to be lowering rates? While you talked about, we have this massive infrastructure build out for AI. So businesses need to start figuring out how serious this is and if they're going to be changing anything from there. And so as we walk through the sectors today, you're going to start seeing some themes come up of what we kind of expect if things kind of continue as is.
This isn't like day one. We've seen the market react, show some volatility over the last couple months. As the rhetoric changes, we've been in war, out of war, in peace, out of peace, open straits, closed straits. But for a long-term investor, what are some of the core principles at a high level we should keep in mind before we go into the details?
Yeah, I mean, you bring up a great point. So this channel is really focused on long-term investing. So in general, when a war breaks out, it's usually temporary. It's more of a blip in time. So if I'm a long-term investor, generally the answer of what you need to do is basically nothing. It's just going to mentally prepare that you're going to be dealing with more short-term volatility. So as we go through this series, that's kind of like one of the big takeaways everyone should have. You don't really have to do anything. And we're going to be talking about how each sector gets affected differently, but you don't need to go buy anything. You don't need to go sell anything. It's more of just having the information ready that if opportunities do come up, that you're kind of understanding the situation from there.
Right, and so it could be opportunistic if you're looking to invest during a dip, some of that volatility. But on the other hand, it's just a blip in time. you don't want to panic sell. You don't want to make rash decisions emotionally because you saw a 30% decline because of this or that. It's having those diamond hands, right? Where you're in for the long haul and you're observing, looking for opportunities, but you're not making emotional decisions. Is that fair?
Yeah, and I mean, if you've been in AI recently, you've felt those double digits. And so you got tested with those diamond sands recently. So we're going to help, hopefully, maybe explain
Yeah.
a little bit of what's going on with that.
So high level, hold, don't make rash decisions. We're in it for the long haul. Obviously, if somebody's a little bit closer to retirement or needing the funds, there might be some additional points to say, but at a high level, that's how we're framing it.
That's exactly right.
All right. So in my mind, I think if we're talking about wartime, it seems like it's a good time for the defensive sector. Am I wrong? What's your thoughts there?
Yeah, I mean, I think when a war breaks out, the very first thing you see is defensive stocks pop off. So you can think of, when it comes to a military perspective, all of the companies that are involved with drones, surveillance, planes, missiles, those are the ones that immediately get a really quick bump.
Yeah.
And obviously, those are the companies that have contracts with the government. The government is using their weapons and systems, so naturally, they're going to need to replenish those eventually.
Yeah, in fact, that's been some of the stories coming out of this particular war event with Iran is some of the expenditure of cost of all of these missiles and drones, millions of dollars being spent combating tens of thousands of dollars, these cheap to build drones coming from Iran. So there's also a financial implication of war and the spend from the government, but an opportunity for these defense contractors as well.
That's right. And if you think of Lockheed and some of these companies are sad when all these $1 million missiles get used, definitely not, because they know that this is pressure coming. And so immediately, when it comes to the defensive sector, war breaking out is a positive for it. It's immediately a natural boon to all of the stocks that kind of fall into it.
Yeah, which is weird to articulate even and to recognize, but I guess that's just the reality. Obviously, war in general is bad, but there are industries that benefit from it.
Absolutely. And if you think of America, what is the first thing you think of? And that's military budget, if you look at our economics. So it's a natural fit there.
All right. So who do you have here in this defensive sector for us?
Yeah. So if I had to pick one stock out of the full list, and again, knowing that in general during war, most of the sector is going to be positive, RTX is my favorite pick from this sector right now. And they're involved with missile defense, radar systems, aerospace, commercial aviation. That's kind of why I like them. They're not a one-trick pony of only being in missiles or only being in surveillance. They kind of play across all of these. And on a forward-looking basis, their PE looks pretty attractive. They're actually a really good growth company versus some of their peers. So they're kind of a name that you can have out there to keep in mind. Now, granted, like we've talked about, the war didn't just start. It's been going on for a while. And the secret is out that these stocks come up during these times of periods. So you're not exactly getting RTX on the cheap, I will say.
So the defensive sector makes sense as war is going on. Is it one of these things where it's cyclical? Not in the sense that we want to be out in wars, but is it when you're out of war, the stock drops? When you're in war, it goes up. And so it's maybe a short-term investment, something to keep on, or this have growth or dividends for the long-term investor as well?
These are companies that can work outside of times of war. A lot of these contracts that they have are many, many years for many billions of dollars. They just get escalated even more during times of war. But one thing that happens is, and like I mentioned with this one, the stock will run up. It'll get more expensive on a current basis. And so from a valuation perspective, these ones can get kind of expensive in the near term. So if you are late to the party, these can be expensive now. And if we get any sense of peace, this is when these ones will start pulling back from there. So if you're leaning more towards I think war is going to continue, this is where the sector becomes more attractive. If you think that we're leaning more towards peace eventually, you might see some of these stocks as expensive. But if you had me pick one, RTX is the one that I would buy here.
Okay. And how does this, in your mind, fit into your overall portfolio? Obviously, we talk about AI a lot, so there's a lot of investors focused on trying to leverage the opportunity with the AI build out. Is it a similar story where you can look at it for opportunistically? Does this sit as a satellite position? Does it diversify and bring some balance against the AI volatility. How would you frame or advise somebody that wants to put RTX in their portfolio?
Yeah, so again, we always recommend no more than 20% of my money going into one stock. So that would be the universal rule. The second thing would be, I would treat this as a satellite to your portfolio. So if I believe in AI, I can have that as one satellite. If I believe that defensive sector is somewhere where I believe in long term, America spends a lot of money on military, I naturally want to do that. This is a separate satellite there. And if you were to compare those two, you do have lots of guaranteed contracts, dividends coming in from the defense sector versus AI is more limited dividends, but very high growth. So you can see how one can kind of offset the other in terms of risk.
All right, so that's the defense sector. Top of my mind is also the oil side and the energy, given the location of the conflict. Where do you put that in?
Yeah, so energy, I think, is the next one that comes into play. Like you said, oil prices shoot up. So naturally, a lot of the oil production, those companies are going to be making more money than they were. Everybody feels the gas prices at the pumps. It's not fun when that goes up. It's kind of like a guaranteed thing, but those are the companies making money. Natural gas continues to stay elevated. And, with renewable resources being a thing, that's also one of the boons that it has for that. And again, during times of war, and just in general, as AI build out is happening, there's already huge focus right now on a strong energy infrastructure grid. So this is just another catalyst to the energy sector.
What's interesting right now is because it's been going on for a while, you're seeing a lot of the oil reserves shrink, where the surplus in the coffers, if you will, are not what they were 6 months ago, which puts a lot more constraints on countries and people are using the oil, which probably likely drives the price up. What range are we talking around here? Because it's gone upwards over $100 a barrel. It's gone down to 70s to 80s. Do you see any correlation or risk there as those oil barrel prices impact some of these energy companies?
Yeah, so for this scenario that we're talking through, where things relatively stay the same as they are,
Mm-hmm.
I would think anywhere between 80 to 100 and some dollars a barrel is the range of what we're talking, which is definitely elevated levels
Right.
when it comes to this. So any of the companies that are producing oil or related to oil are going to be going up. Any of the companies that need oil are going to be majorly impacted, and we'll be talking about that here a little bit later in the episode.
All right. So for the energy sector, what stands out?
So my pick right now would be Exxon Mobil. So again, I want one of the oil producers. They also have natural gas businesses. So they have multiple energy sources that they're putting together, but they have incredible cash flow, really strong balance sheet. I mean, they pay a great dividend, like you mentioned before. So if the company already does well, because oil is such a necessary thing, now the price of oil and how much my margins are up, Exxon's a really good way. If I believe that oil is going to stay elevated, Exxon Mobil is a great way to play that.
Adjacent to the oil, by the way, I always have in the back of my mind, in the last video we talked about Constellation Energy and their focus on nuclear. And as oil gets constrained, I think everyone is reminded that it's not the only source of energy.
Right.
And it could add some energy, no pun intended, to some of those other companies we've talked about as well.
Yeah, and maybe in future episodes we might be talking about Constellation. We'll have to see.
Oh, shoot. All right, so that makes sense about specifically for energy and ExxonMobil. What sector do you have next?
Yeah, so I think the next one to talk about is a less direct, obvious one. And really the rest of the list will be directly obvious, but the next one I want to talk about is industrials and electrical infrastructure. So again, we've got the AI build out going on. We've got concerns around our energy grid. All of those defense facilities, there are structural components that are needed. So if we do need to crank up production in those, they're going to have to expand their facilities. That's where industrial and electrical infrastructure comes into play.
Makes sense. Makes sense. Who do you have in this sector?
Well, if you've been watching the channel for a little bit, you're probably not super surprised by the name I'm about to drop, and that is Eaton. So again, Eaton is another company that fits so well within this perspective because it has really good trends already going from an AI perspective. As data centers continue to get built out, I need Eaton's components to just help with electrification. So if I need that, plus conflict comes into play where there could be other manufacturing facilities that need electrical pieces, Eaton is a great way to kind of play this. They just had amazing earnings recently, double-digit EPS growth. They talked about their backlog of orders being well into the future, and they pay a nice dividend as well. They're just positioned really well, and the current situation of the war being elevated is just another tailwind for their business.
Yeah, so we've covered them a lot. So it's nice to see them diversify or be important in multiple areas of investment.
And those are my favorite stocks.
Yeah.
You don't want one-trick ponies that they can do one thing well. These companies that are so gigantic and their components are so good that they can have multiple tailwinds coming in, that's what drives stock returns over time.
Yeah. All right. So that makes sense. So we got Eaton, we got Exxon. Who do we have next?
So the next one I want to talk about is tech and AI. So the reason that this is important to talk about is, there's kind of like an arms race, if you will, a separate type of war that's going on right now, really between the US and China. Who is going to win AI there? And we can't have the Middle East war causing us to slow down on our AI spend, or we're going to naturally fall behind there. So this starts raising questions of how are companies going to view the war, and are they going to back spending off because they're concerned about rising oil prices and energy? So it kind of it adds an extra question to things.
Yeah, not to mention, there's a big debate going on around AI, and is it a closed model that is the best path or an open source model? You're seeing China release some new models that are open source that are, making big impacts.
Yep.
Able to do this at fractions of the cost of OpenAI and Anthropic and some of the US models. So it'll be interesting to see how that develops. But your point's taken, because all of this, as we know, is generating a huge amount of CapEx spend.
Yes.
Even to the point where Google was negative cash flow, or they spent it all. And so with the war, if it accelerates and continues, companies may be saying, let's cool our jets a little bit so we don't overextend ourselves. Is that a fair thought?
Yeah, I mean, that's exactly what's going to be going through people's minds. But what's so interesting is, because I mentioned like the other arms race that's going on with AI, it's almost a national security concern if we do fall behind with AI.
Yeah.
That's why we've seen the government like really getting involved here. So who's to say the government won't try to supplement and make sure the AI build out happens anyways because of that? So it's such a weird situation, because generally during times of war, the high growth approach is not going to do well.
Yeah.
You're going to see those stocks pull back. AI is a little bit different though, because it's like a real infrastructure build out that needs to take place. It's not just a pure tech play. So it adds a lot of variables to it.
Yeah, you see a lot of recent things happening where AI models are hacking companies to solve the problems they've been tasked with, which is just wild to think about.
Don't you just love like when you see human-like qualities happening? It's like if you give a person a chance to cheat on certain things, you know what? They're probably going to take you up on that.
I had read that with a recent one, it was only found because of the AI model found it, and the company didn't even realize the hacking had occurred. And so now it's AI model against AI model in a conflict type of or competitive state. So
right, that's exactly it. So I mean, this is where cybersecurity starts coming into play. So there's definitely multiple layers to AI there.
All right, so you like more than one trick pony types of companies. We talked about a couple sectors in the companies. What is the company in the tech one here?
So again, this is another one of my favorites, and this is Broadcom. So we've talked about Broadcom is able to hit multiple infrastructure points when it comes to data warehouses. So they're making the custom chips, but they're also involved in the connectivity, which is another big place. So when you look at hitting multiple choke points combined with amazing dividend and double-digit dividend growth. So even if the stock does pull back, at least I have dividends that I can kind of rely on a little bit versus some of the other high growth companies in it.
Yeah.
So again, this sector in general is going to be not as hot as energy and defense, but if I had to pick one, I want a company that hits multiple choke points, and that's where Broadcom comes into play.
Real quick, my challenge on Broadcom though is still pretty expensive. Is that wrong?
So on a current basis, they definitely are expensive. On a forward-looking basis, their forward PE continues to hover in like the low 20s. So they have lots of really strong areas of their business, projecting really strong growth into the future. And when I view growth companies, so Broadcom is different than the other two we've talked about. They really are a growth company.
Mhm.
I really need to look at future growth. The current present status of the company isn't actually telling the full story.
All right, so that's Broadcom. What other areas or sectors benefit or have attention, if you will, during a wartime?
The next one that I want to talk through is consumer stocks. And so this is really what happens at the end, or it's a cause of war. So what we're going to be talking through is what happens during war and the result of it. Inflation.
Yeah.
If inflation goes up, everything costs more for the consumer. If prices are going up, I need areas to go start finding value. We talked about if oil is going up, then the price I'm paying at the pump is also up. If I'm spending more at a gas station filling up my car, I have less money for other things. So in general, consumer stocks are going to struggle a little bit during times where war is existing. Now, within consumer stocks, though, stocks that are within there that have the consumer staples, like the companies that produce the goods that everyone needs regardless, those kind of actually can have a benefit from this, because I have to get my gas and I have to have my core consumer staples. It's really the consumer discretionary stocks where you're going to see those pull back.
Yeah, that makes sense. We covered this sector a little bit in our sector video. I'll put that up for our viewers to check out. But it does make sense, right? If you have these inflation costs, you're spending more on the gas, you're going to look for savings or optimizing your budget, maybe shopping at Whole Foods. No offense, Whole Foods. You might adjust some of that to be more affordable grocery shopping and spend. Curious what company comes to mind here for you.
Yeah, so beautiful tie-in there. When I think of value for the consumer, I think of Walmart. So Walmart is my pick here. I mean, they're basically the largest grocery retailer, and as you know, they really specialize in having the best prices around. And they've done a really nice job of attracting higher end, more affluent consumers to Walmart. Because when you think of Walmart, you kind of sometimes think of like the lower end consumer, but they've done a nice job of showing that they carry products there at just a better price. So even if I have more money, I know that I can get a good deal with Walmart. So they're going to be a natural winner during times of like this, where if I'm really conscious of my money,
Yeah.
Walmart's going to benefit from that.
That makes sense. I know in this sector you also liked Costco, but the issue I see from what you just shared is Costco isn't necessarily affordable. You can buy things in bulk, but they have a lot of expensive stuff as well. So maybe you aren't spending as much in Costco. You're going on the more affordable side with Walmart. So
yes, and if you think about it, in order to have a membership fee, I have to pay the membership fees. And my basket that I'm shopping with at Costco is usually triple digits.
yeah,
I might not have triple digits left after I'm paying for all this stuff. So even though I might be saving money on a bulk basis, if the price of the basket gets too high, I have to default away from Costco and more into a Walmart.
that's great. And does Walmart have a decent dividend?
Walmart does have a decent dividend as well.
Yeah.
So again, any of these companies that have really strong, kind of consistent cash flow like Walmart does, they're able to pay out a nice dividend and kind of supplements things there.
That's nice. So not only can it be opportunistic during this time, it has a dividend and it isn't going anywhere soon. So it could be a long-term hold as well to round out your portfolio.
Yeah, honestly, of the names we've gone through so far, I mean, it's probably one of the most consistent stocks that we're going to be talking through today.
Okay. What else do you have? What other sector?
So the next one I want to talk through is financials. So think of the banks that are out there. The way that the banks can make money during environments like this is rates are high right now versus what they were, several years ago. And when rates come up, it's more expensive for me to borrow money, and the banks are able to make more money with that. We've also seen a lot of banks recently. We've had some blockbuster IPOs coming out. When companies decide to IPO on the market, they partner with the bank, and the bank makes a lot of money during those. So as we continue to see more companies having their public offering, they can make money through that. So again, this is another area that has really consistent ability to make money. But if I'm not in a growth mode and I'm uncertain on the future because of war, my propensity to want to borrow money is going to go down. So even though the bank is making more money on the borrowed money, they're going to have less people wanting to borrow the money because I don't want to be spending my money if I'm uncertain about the future. So financials is more of a mixed segment when it looks like that.
And right now there's some controversy with the new Fed chair. Some people wanted him to raise the interest rate to help curb inflation. Obviously, Trump wanted it to stay low so people would borrow and build and spend. So it's just interesting time as it relates to the financial sector too, and the play with interest rates and its impact on the AI build out, but now even the conflict.
That's right. And whenever there's politics involved, I feel like the truth is always somewhere in the middle of where we should be. The Fed just came out and said that they're holding rates steady. So again, from a stock market perspective, it's better if rates are down. So obviously Trump wants rates to go down because he wants people to be growing and the economy to be going up in stocks like that. But we can't just we can't just lower rates left and right because then that can cause inflation over time. So this is the eternal argument of what's going on.
I'm not real familiar with this sector. Who's your pick?
Yeah, so I'm going to be going with the biggest bank that's out there, and that's JPMorgan Chase here. So I think everybody knows them. They have industry leading balance sheet. They have branches everywhere. They have really strong asset management, and they're kind of like the bank when it comes to these. So again, I'm not super hot on this sector as a time to play right now, especially because rates are kind of in flux. But if you had me pick one, I'm going to go with the leader, and that's JPMorgan Chase.
All right, so that's financials. What's the next sector you see benefiting or being a part of this conflict?
So the next one I'm going to talk through is, again, just another one that's not directly related to the war, and that's healthcare. But the reason I want to talk about healthcare is this is a sector that tends to do better during times of uncertainty. It's more of a safe sector. So if you think about, we just have an aging population. We need people that need medical care, and that's not going away. And it's a very guaranteed thing. As people get older, you need more healthcare. So people kind of look to healthcare as a sector as more of a defensive play in general. So immediately, if I need to get out of my high growth stocks, healthcare is one of those stocks that you're going to see some of those ones that are underlying kind of get a boost from that.
Yeah, because some of the behavior in the market is money fluctuates, whether from retail investors trying to, protect their investments to institutional investments as well. So money sometimes moves not only from company to company, but sector to sector. So is that what can potentially happen here with healthcare?
Yes, and I think to zoom out and think of it, war creates uncertainty. So if I'm less certain on the future, my appetite for risk goes down. So the average natural investor is going to be like, oh, I need to sell my high risk stocks and move them to safety. So that's why you see the high risk tech stocks start selling off, and some of these start to get a little bit of a boost. Now, it doesn't mean that that's the right thing to do. It's just naturally what happens during times of uncertainty, and that's why this sector is important to talk about.
Right. And if you have a balanced portfolio where you maybe already have some of this in a defensive mindset, you have some high growth areas, you can absorb both of those and benefit, so it prevents a lot of that literal volatility within your portfolio.
Right, and it's just another reason why it's really smart to diversify, right? Because there's no one stock that is going up no matter the situation, so it's good to have stocks that can go up for different situations.
Yeah, you make that strong point in our recent newsletter, in fact, last week. I encourage people to check that out. You can sign up, let us know in the comments, or they can let us know in the comments, but also check us out at alextalkstocks.com.
That's right, yeah. And again, that's just another great way for us to share more information outside of just the videos.
Yeah, because otherwise we'd be talking for hours and we'd lose them anyways.
That's right.
Who's your pick?
So this is another name that people should be really familiar with, and that's Johnson & Johnson. So massive pharmaceuticals and medical CPG company. They have extremely good cash flow. They're part of the dividend aristocrats, meaning that they've consistently raised their dividend over time. So if I'm looking for safety, dividend kind of screams safety to me. And of the brands that they have and how cemented they are within consumer staples, Johnson & Johnson is one of the strongest companies you can possibly be invested in. Their ceiling isn't high. So if I'm expecting peace soon, you're going to see Johnson & Johnson kind of lag some of those other companies. But if we do see the current situation continue or the escalation of war, Johnson & Johnson is a company that can kind of ride that out better.
Right. But even without that, they may not have double-digit growth, but the dividend is part of that benefit.
That's right. So again, they're serving a different role in my portfolio if I'm in Johnson & Johnson.
Mm.
I'm not expecting to double my money anytime soon, but
Yeah.
I am expecting consistent growth and really nice cash payouts where it lets me sleep better at night, if you will.
Yeah. Yeah, we were talking earlier offline about just the power of dividends, and you can have a pretty strong strategy for retirement built around dividend companies. Basically, if you have enough invested, those dividends can kick back a significant amount of money that you can then take part of that, take all your dividends or take part, a percentage of it, still invest some and live off it, into retirement. So there's a lot of benefits for dividend companies.
That's right. And we have a great video talking about some of my favorite picks within dividends that I would recommend people check out.
All right, so that's healthcare. What's the next sector you want to bring up?
So the next thing I want to talk about is kind of adjacent to energy, and that's utilities and power. So we know from a grid perspective, the US continues to be strained. We've got crazy weather right now. I know that we're cranking the AC here. We've got the AI build out, which is creating more demand for power. So the companies that are positioned to provide that power are going to be some of the most consistent companies you can have moving forward. Everybody has to pay their taxes. You have to pay your utilities. They have really stable ways to make money. Again, if I'm looking for safety during times of uncertainty, this is where utilities come in.
All right. So who do you have in the utilities?
Well, we kind of teased it, and surprise, it's this episode, but Constellation Energy is my favorite. So they are the largest nuclear provider within the US. So we've talked about lots of different alternative energies. Nuclear, I think, is going to be a big winner just moving forward and in general because of the consistent scale of renewable energy that nuclear can provide. If I have huge demand because of AI, and then I have other uncertainty around oil and all these other things that need to be transported around the world, things that we can do at home with nuclear is going to be way better moving forward. And so Constellation is my favorite of those picks.
Yeah, I think it still maintains some volatility because the acceptance of nuclear within culture and society needs some convincing. I mean, you're already seeing people not wanting data centers in their town because of the impact. I think nuclear may have some pushback as well. But at the same time, as all of that just grows in the demand, it could be super helpful. You get a pilot city that's running off of it. They're, happy about it. And then that snowball goes. And before you know it, may be a pretty big part of our energy solution.
I mean, it sounds like they need a campaign manager. Maybe you can put in your resume.
Well, that one will be interesting to continue to watch. I do have a small position in Constellation for all the other reasons we talked about. So it's nice to know that this also is one of those companies where you're getting more bang for your buck in multiple arenas and situations.
That's right.
All right. Who do you have next?
Travel and transportation. So this is probably the number one sector that if there was like a high risk one during war, this is it. As the cost of goods go up for me to fuel my transportation, everything goes up from there because of that, and this industry directly gets hurt.
Yeah, I'm thinking trucking, grocery stores, having to pay more for their trucks, pass that that expense down to the consumer. Groceries go up, and that's just one aspect of it. So I can see how this can be a high risk scenario or more volatile during this time. What's the company you have here?
So the one I would recommend of this grouping is Booking Holdings. So when you think about like bookings.com and OpenTable, they don't really necessarily care who is winning. They win if someone else is winning. So if I had to pick a winner, knowing that in general everything is going to be kind of hurting during this time period, I want the company that is more likely to win because they don't really care the particular one that's winning. Booking Holdings is the way to go from there. So they have really good margins. Their free cash flow is pretty good. So if you made me buy one during a time like this, that would be the one that I would go with. But again, my recommendation in general is to kind of put these on your watch list because this sector will get a nice boost if we get a peace treaty that comes out.
Well, you raise a good point. You're not necessarily saying to invest in all of these companies during war. But you're highlighting some that are either benefiting or to watch for if you're already invested, things like that, right?
Yeah, so again, this isn't a buy list or an avoid list. This is more of a what to expect in each sector
Mm,
and what are the companies that can maybe do well if that sector does well. So again, I want to keep into context of the situation because
yeah,
my recommendations are going to change in each of these episodes.
right. If it's war increasing or declining.
That's right.
All right, what's the next sector?
So the final one that we're going to be talking to is kind of a hard pivot from here. And when I think of safety, be it better for or worse, gold comes into play. The eternal value source that is gold, not just for boomers, apparently. Everyone values gold. And again, I'm not saying run to your pawn shop and start buying gold. I'm talking about the gold industry. So the miners specifically, the people that are actually producing all of that. So it's a harsh pivot into more of a material rather than an actual company. So you're tied to a commodity rather than a specific kind of service or anything else you're providing.
Yeah, it's funny you mentioned gold. My friend Mike and I were talking about how people have been buying gold at Costco and it's been selling out.
That's right.
But so we're not talking about that. How do you invest in or amass gold, if you will?
Yeah, so my play on this is Agnico Eagle. And so they are a gold miner. So they're easily one of the highest quality ones that are out there. They have a really good history of producing, and the cash flow is one of my favorite things about this company. So any of these companies that have consistent cash flow during times of uncertainty, I can kind of count on their business more. And like you mentioned, gold is not tied to just war. So there's always going to be a demand for gold because people just see value in it in general. So this is one, again, I'm not a huge fan of just going and getting gold or getting into gold. To me, it's kind of like an older way to look at things. I prefer to kind of have this on your watch list, but don't be surprised if some of these gold miners actually start benefiting from times of war.
Yeah, I can't help but to imagine like employees and the CEO of this company like having gold teeth and outfitted in gold and gold everywhere. Maybe they're sponsoring Trump with all his gold love, but
Yeah, you can either take your paycheck in dollars or gold.
right.
It's your choice. Yeah.
But this is an interesting angle, kind of almost the picks and shovels of the gold industry, if you will.
That's exactly it. Because I could go buy gold as a commodity, but I mean that thing has really came down a lot versus where it was at the peak.
Yeah.
So I try to avoid commodities because they tend to be more volatile. I can't just sometimes just buy and forget some of those things. I like the miners though that do the job well from there. So again, this isn't my favorite area to invest.
Yeah.
But if I had to pick a company within this sector, that's the one I go with.
Okay. Well, that makes sense. Tying a bow to this all, we're talking about wartime and some of the opportunities and or concerns that can impact the stock market. How would you summarize this video and some of your picks?
Yeah, so assuming that the war kind of stays where it's at, we're going to have some volatility and everything. Again, as a long-term investor, I don't think anybody has to do anything. But if I'm new into the market or looking to enter the market or looking for opportunities, those first couple that I start off with are where I would start looking.
Yeah.
Defensive as well as energy. Those are going to be the two most obvious areas that'll be natural beneficiaries. Tech and high valued tech in terms of valuation, those are going to be struggling a little bit right now because again, there is uncertainty into the future because we don't really know, is there going to be peace or is there going to be more war? I have to be somewhere in the middle. So less risk is just going to do better during times of uncertainty.
And give us a little teaser on what we can think about or look forward to for this next episode.
Yes, so today again, we discussed the current situation as is. But what if the situation came to some sort of peace treaty? And I'm not talking guess what, the strait is open, guess what, it's not. I'm talking of truthful, actually happens. We go back to a time of peace. We pull out of the Middle East, the strait is open for business. What can you expect as an outcome as an investor? That's what we're going to cover next time.
Right, which could be nice because if that happens and we have this video information, we could potentially get ahead of it.
That's right.
Hopefully.
That's right. And that's how I always want to be thinking. What is the next event I need to be prepared for as an investor?
And then the final one will be the opposite, right?
That's right. So that would be like the worst case scenario of war escalating, perhaps multiple countries getting involved, the price of oil spiking. Probably not good, but we're going to be saving that for last.
Yeah. Well, excited for that. Alex, thanks for talking stocks today. I encourage anyone to like and subscribe, check out our previous videos, and stay tuned for this next episodes in this series. Thanks for talking.
We'll talk to you soon.
All right. Thank you. Ciao.